Welcome to MakingRealEstateFun.com. Today is Red Nose Day. We're celebrating a little, and we all have noses on except for Erin because she has a red coat. But I think we're going to take it off because it's a little difficult to speak in. So, I want to welcome you. I'm Keith Hoffman with Draper Kramer Mortgage Corp. I am co-hosting today with Manuel and Anthony Latham from National Title Solutions. And our guest today is Erin Ahern from Genworth. Welcome.
Thank you.
So today we wanted to talk a little about mortgage insurance because everybody that buys a home doesn't have 20% to put down. So we thought maybe we would ask you a little about that. Tell us a little about mortgage insurance.
Sure. So Keith, a lot of people aren't in a position to put 20% down. So they have two paths. They can either go get an FHA loan where they would have government mortgage insurance, or they can put as little as 3% down and get a conventional loan with private mortgage insurance.
Interesting.
Who's your primary target? Who's someone that you try to get business from?
We usually work directly with lenders. So we're out there helping lenders with their loans over 80%.
Gotcha.
Yeah.
And a question, what is it exactly insured? Because I've heard different, obviously we know, like, for instance, when the crisis happened, you hear people say, oh, well, yeah, they foreclosed on that property, but they had insurance on it. Can you clear that up or explain a little bit?
Sure. So what happens is the reason why there is mortgage insurance out there is because people don't have 20% down.
Gotcha.
And if there is a claim, a foreclosure or short sale, the lender then is given the mortgage insurance, and then we're able to help them with the claim. And not to give them added protection and comfort.
So they're saying it's because you're not putting 20% down. 20% down, it's a little more riskier. So it's insurance, and provided if the homeowner decides to walk away from the home or whatever, the lender's covered in that essence.
Absolutely. So a couple things, right? I did not have 20% to put down when I bought my first house. I was lucky to be able to scrape 10% to be able to buy my first house. So it was so helpful for me. And I would say, I think the last stat I saw was about 80% of millennials today need mortgage insurance of some type in order for them to get into a home.
Sure.
So not only does it protect the lender, but during the economic downturn, we paid as an industry over $50 billion in claims.
How much?
$50 billion in claims.
That's a lot of tamales.
That's a B.
Yeah.
Billion.
B with a billion.
Wow.
Yes, B with a billion. But one of the nice things about mortgage insurance is people always think that the only benefit is that it protects the lenders, but it also protects the borrowers.
Gotcha.
Because if your borrowers have difficulty making their payments, they have an opportunity to reach out to their mortgage insurance company to see if maybe they could use a little help, extend the time their amount. Yeah.
That's good to know.
Yeah.
So for every deal, is mortgage insurance required?
Only for loans over 80 LTV.
Gotcha.
And is it required to keep the insurance throughout the whole term of the loan?
Great question. So once that loan amortizes down to 78 LTV, it automatically cancels off as long as your borrower is making on-time payments.
Gotcha. So is that something that the client or the borrower has to keep in mind, or is that something you'll let them know, hey, you're up to that? How does that work?
Well, you know what? It actually works a couple different ways, right?
Okay.
So if they don't do anything, they just pay it down like normal, automatically it'll cancel at 78 LTV.
Okay, good.
If they have extra money to put aside to pay it down sooner than that, they can initiate that cancellation and reach out to their servicer and ask them to cancel it as long as they're making their payments on time.
I see.
So I know one of the biggest questions I have is when it comes to mortgage insurance, how soon can they get rid of it? So can they do a combination of the value going up and paying the principal down, or is there a length of time that has to be done?
Great question. So let's say, for example, they're in an area that they're seeing a lot of improvement in values, right? And maybe they've done some work on their home. Traditionally, servicers are going to require that they keep that mortgage insurance on for at least 2 years. And then once the 2-year marker hits and they would like to utilize an appraisal to drop it, they can do so by reaching out to their servicer. The servicer will let them know what appraiser to use, and then they can get that appraisal done at the borrower's expense. Right. And if the value's there, then they'll have the ability to cancel it.
Perfect.
Where's your office located?
Oh, I'm here in the Chicagoland market, but our home office is in Raleigh, North Carolina.
Great place. Great place. Unless you're a University of North Carolina fan out of Chapel Hill. You know? So tell me a little difference between FHA loans and conventional loans when it comes to the mortgage insurance piece.
Okay. So with FHA loans, you have an upfront MIP and then a monthly.
MIP meaning?
Mortgage insurance premium.
Gotcha.
Yes.
I know that.
I know that. Do you know that?
Do you know that?
And with conventional mortgage insurance, you have different options available to the borrower. So you can do just regular monthly, just like an FHA loan, or you can do a single premium, you can do a lender paid. So there are some nice options available to the borrower based upon their needs.
Okay.
And in addition to that, with private mortgage insurance, you have the ability to cancel that in most instances. Whereas if you have an FHA loan over 95 LTV, they're going to carry life of loan coverage from a mortgage insurance perspective.
Great information. Great
So
information.
one more question.
Sure.
When it comes to mortgage insurance, why should anybody put more than 5 or 10% down? Are the cost difference between 5 or 10 or 15% down different? And then do the credit scores come into effect?
Yeah, so all come into effect, right? So the more that someone puts down from a mortgage insurance perspective, the lower their monthly payment's going to be. But you've got some really savvy borrowers out there with these 97 and 95% programs where they'd like to invest that money somewhere else, and they may not want to, at this point in time, invest it in the home. So that allows more flexibility for your borrower based on their current circumstances. So they can put a little bit more in their pocket, or they can put more down on their home. So it just depends on what it is that they want to accomplish.
Great.
Great.
Well, since I'm the only one who deals with the consumer direct, and Ray and Anthony and Erin, all are their customers are more or less mortgage lenders or banks. How can somebody get in touch with you, Ray, if they're a lender and they need to talk about title insurance?
Well, if you need to get a hold of us, I mean, our website, www.ntsnational.com, you can contact us there. Our phone number is 630-778-0007.
Wonderful. And then Erin, when lenders need to get in touch with you and they want a very professional, good mortgage insurance company, how do they get in touch with you?
For lenders in the Chicagoland market, they can contact me at 773-339-9146.
Perfect. And if somebody needs to get a mortgage or some information related to mortgages, you can get in touch with me by calling my cell phone at 630-306-5626. We want to thank Tom Weiler from Weiler Studios for shooting our video today. He's professional, and if you're interested in getting any kind of videography, he's the guy you need to call. You can email him at info@weilerstudios.com. We appreciate it. Look forward to talking to you and having you visit us on makingrealestatefun.com.